Hi everybody, this is Cal. Never fight with the Federal Reserve. Yes, this statement has been ongoing for months and months and months. And of course, repeatedly, so when someone said this, the market usually rebound, right? But this time round, I think you just have to be very, very careful because I think that something bad is going to happen pretty soon. Alright, so before we start today's session itself, once again, disclaimer applied, and thank you AIMS for supporting this. Now remember, in March 2020, I have been basically reminding people about what Jerome Powell said. He has already been very specific and clear that he wants the inflation to come down. But the only way to do that itself is to rate hike. And it will not be like 0.5, 0.75, and that's it. I already mentioned that it's easily at least 3 to 4%. And of course, at the same time itself, right, commodity prices was going up, which is not really the normal, but we all saw what happened, and that's why our chicken rice now is at 450, 550. Remember that when I was saying this, that chicken rice will be more than 450 or 550, people were laughing at me last year, but now they get to see it, right? So the thing is this, why so? Now we have a lot of this expert now all saying the same thing. Don't fight the fundamentals or the Federal Reserve, alright? Because this is not going to be healthy. And even Bank of America strategists came in to say that you shouldn't fight the Federal Reserve. Now why is that so? As we all know, the main thing is this, because this time is not going to be different. Now even our own business time says that this time could really be different if you actually think that way itself, and I totally agree, because the problem is that, right, a lot of people think that Federal Reserve is just kidding. But if you actually notice the words that Jerome Powell has been using, it's very clear that he has informed us that he's going to inflict more pains into the market. So now what is happening? The global bonds market have tumbled, okay? It's tumbled into their first bear market in a generation, okay? The Bloomberg index dropped by 20% from its January 2021 peak. Alright, so let's take a look at the numbers. You can see very, very clear right now. You can see that from 2019, whereby we have the full flash of the monetary policy, very easy one going on, and so the market shoot up all the way. Alright, that's where the bond market went up, the yield fell, right? But now, since here, we have the peak of the bond market, and ever since then the bond market has tumbled all the way down, and there is a very good chance that we may even see the 2014 low, because most likely the central banks around the whole world will be hiking interest rate together with the US Federal Reserve, and of course that will create a lot of pain in the coming months in the market. So that is the reason why you can see that there's no escape from the biggest bond loss in decades as Federal Reserve kept hiking. And this is going to tilt. And I believe that this time around we're going to see another 75 basis point this coming week. This month for the Federal Reserve meeting. And of course, I believe another 50 basis point later on. In my opinion itself, right, I'm actually looking at about 4.5% by probably March to June next year for the entire thing to come down, because with the inflation now it's at 8.5% for the CPI data, it's going to be very difficult if you don't go above 4%. So that's the reason whereby now we have to understand the situation here. Now based on Wikipedia right now, right, the current situation is that the bond market size, okay, is about $119 trillion worldwide, and US alone itself is 46 trillion. So what is happening now? If let's say we do expect another 10% decline on the bond market, that means that it's easily another about $12 trillion evaporating from the market. And this is going to inflict lots of pain, because this money are the one that's holding the market right now, and if it's not going to be helpful, things will get pretty bad. And this is the reason why the CPI data, it has been going up non-stop, okay? Non-stop and been moving upwards itself. You can see over here, even though we have hit a peak of 9.1 recently, but that's going to help because now UK has went to 9.1 themselves, okay? Europe is about 8.1, and most likely these numbers are going to climb, especially we are entering the the winter season, whereby we're going to spend more on probably groceries, food, presents, and even expenditures. All right, so I believe that this number will climb past 10% for the UK and US by the end of this year. And of course, if this will continue, right, it's not going to help, but the Federal Reserve is going to increase interest rate. They're going to increase it, and it will be higher and higher until we come to equilibrium. And that is going to be very painful for the whole market. So in his speech already, he said, right, he delivered a very powerful and a tough lesson. And he said that in a way, just don't fight with us. It's really ridiculous. He says that, right, this will likely bring some pain to households and businesses. And this is what he acknowledged, in fact. And of course, the scary part is this, okay? Even, let's say now the Federal Reserve decided that maybe 2% a target for inflation is too low. Let's bring it to 3%. Now, based on this analysis from RSM, they are saying that, right, that will mean about 1.7 million jobs will be lost during the period of time. Because when you increase interest rate itself, cost increases and businesses get affected. And hence, therefore, most likely businesses will cut employment. And that's the reason why last Friday, when the non-farm payroll figures at 300,000+, the market was happy, because the market is happy for the employment going down. Can't make sense, right? It sounds so funny, but that is how it works. And I've been telling people that if, let's say now, the Federal Reserve wants to really bring down inflation, they have to allow employment to be there. And if let's say the Federal Reserve decided that, you know what, let's just do a bit more, okay, and bring down inflation down to 2%, my God, that means that they will increase the interest rate much higher, right? That means that, right, there could be up to 5.3 million jobs lost before, and of course, unemployment will hit about 6.7. Now, do note the current unemployment data now is at 3.2 or 3.3. I can't remember the exact number, but it's somewhere around there, and this is really, really bad, okay? So think about this for a moment now. Look at it on numbers. The 10-year yield and the 2-year yield Treasury spread, right, has still stayed inverted. That means it's below the 0% mark itself. And this is not good. No, why is that so? Because history has proven that whenever there's a yield curve inversion between 10 and 2, recession is going to be very nearby. Every time there's an inversion, recession is nearby. Every time there's an inversion, recession always comes. You can see right now, right, every time, without fail, every time when there's inversion, it's just about 6 months to 9 months down the road, we're going to see a recession. So we had one back in 2019, all right, and that was where it is, and that was this is pretty fast recession, because we came in with another $4 trillion to save the day during the pandemic time. But this time around, it's very clear that we are inverting, and of course, every time when such an inversion comes in, it's all right. Is without a doubt, recession is just coming in. So which means that by latest itself, by January to February 2023, we will definitely see a recession. And prior to recession, usually the stock market will be down by 20 to 30%, and that is where my worry is. Okay guys, hopefully you understand what I just shared with you, and of course prepare yourself. This is not going to be nice. Alright, so let's take a look at the market right now and see what can we do for today. Okay, let's go. Now you can see for today now the US Dow Jones, let's take a look right now. The US Dow Jones today is trading above my MLP level at 31,404. So as long as the market stays above 31,404 without pivot today, it will be a buy once it's above opening price. Now do note the KSI is red, hence therefore there will be profit taking around the top area. So where would that be? If you look at the screen right now, you can see that this is the MLP just now, and the market initially was just sideways before the GTH hours. And once the market hit the MLP, you notice that the market just couldn't go down, right? This is a telltale sign for you to be on a long side instead. And of course, the market just shoot up all the way. Brilliant. So where's the first profit level? I think that the first profit level is about 31,572 or maybe 31,689. I think that will be the two numbers that I'm actually watching for today, all right? All right, let's look about this, the NASDAQ, shall we? Now, NASDAQ today is above the pivot 2. Now, today is an inverted pivots, okay? Meaning that if the market stays above MLP and above OP, today for the NASDAQ will be a buy, and you can see right now it's going up. And of course, the KSI is green in color, that facilitates the upside, okay? Now, how high would it be going? Well, I think it's going to go up to here at 12,286, okay? So watch out for this particular figure. Now, how about the S&P 500? Let's take a look now at the S&P 500. S&P 500 was also an inverted pivot. Oh my God, two inverted pivot at the same time. Okay, And this time around, the S&P 500 do have a doji directional day, which means that today, as long as the market stays above OP, today is a buy day, all right? It's a buy day, all right? So the KSI is green, means upside is confirmed. So most likely you're going to see the S&P trading up towards here, 39.61, if not 39.74. So traders, watch out for these two numbers. Most likely the market is heading towards that particular direction, all right? So that is on the US market. Let's look at the crude oil market. Now the crude oil market today is above MLP at 87.93. As long as the market stays above OP, it should be upside, should be there. Most likely it's going for $90.30 as a MA30 level. KSI is green in color. Now, what if let's say there's more rate hike? Then that will add pressure on the US dollar to go higher, and of course that means that crude oil might be going down again. But more critical is that the crude oil price going downwards is alright. It actually also tells you that the economy may not be doing as well, and that is actually a very a scary thing itself. Alright, now let's look at DAX. DAX has just opened and DAX has just blossomed out beautifully. Now DAX opened above the MLP, and once you trade above OP and pivot 1, this is a very strong buy signal, right? So once the market crossed 12,757, it will be a buy instantly. And we can see from the chart now, wow, look at it, so beautiful, right? The market was sideways, but once it crossed the 12,757 pivot 1 level, the market shoot all the way up to KTL plus 3. Now, this is a good place to take some profit, okay? Traders who are long in the market right now, 12,877 is a good level to take some profit on the DAX, okay? You don't hold too long on this. All right, take some profit. That's the best thing to do, okay? All right, now someone asked me about China. Now, China market is still on the way downwards itself, and this is not going to be good. The China market is still can't find a foothold, although at about this 13,000 is a psychological level, but I kind of believe that it might have to go downwards to touch a trend line, the major trend line, to find a base. All right, so I think that traders shouldn't be long and at the moment right now for this market. Yep, I think you should just cool off, wait for a while, okay? Now, how about gold? Let's take a look at gold today. Now, for gold today, right, we have, oh, wait, hold on a minute, it should be here. There we go. All right, for gold sorry, this is silver moment. Okay, here we go, gold. Now, gold this morning has blast past this pivot 1 at 1718, all right, and it went on the high of 1726, but it got rejected. Now, why is that so? Because the US dollar is kind of going to continue to go higher. And as long as the US dollar is going to go higher, right, that will actually bring and give a lot of pressure on the US commodities. So for today, as long as the gold doesn't go above 1718, I would think that it's a good buy now. Just wait for a while. Now the base itself is 1710. That is the MLP level for today. KSI is red, blue bars are there, so it's not going to be the best trade, right, for the gold market. Now silver, silver itself today has stayed above the MLP and is trading upwards above the pivot 1. So as long as silver go and stay above 1836, the upside is still going to be there itself. All right. Last but not least, let's look at the Bitcoin market. Now, Bitcoin is very sluggish. I mean, bouncing around at the BNB level. All right. So as long as the market stays above 19,500, this is the base level, the BNB. As long as it stays above this figure, it's fine. But if the market loses 19,500, then the selling should bring it back down to 18,607, okay? But at the moment now, the indicator of mine shows that the upside is still there because buying is still quite strong at the moment from the boys. But the, the retail side itself, right, the weightage is quite low. So we're going to have a big signal here. All right, so for guys who want to buy, you try to buy it at 19,500. That'll be safer, okay? But once you break it, it's going to be coming down, yep. All right, Ethereum. Now, Ethereum today has blast past, okay? Today, Ethereum has blast past. Now, this is where it is right now. The market has broke the RL level. This is the third day, and likely today, Ethereum going to take down 1683. All right, we're just about $20 away. And the KSI itself is red with no blue bar. Now, it means that the momentum for buying is there. So, 1683 most likely will be taken out, okay, later today, if I see it correctly. Okay guys, so that is all for today's market views and MAO. Hope you like this session. It will be the same every single day. Cheers guys, have a great day. Bye bye.